Hello. Good morning, good afternoon, good evening. Thank you guys for joining the 9 Innings Monthly Market Recap. I'm your host, Kevin Thompson, founder and CEO of 9 Innings Capital Group. And we're here to talk to you a little bit about what's going on with the markets, talk to you a little bit about how we're investing moving forward and how our clients are investing moving forward, and just basically remaining focused on the long-term outlook. So stay tuned. So as you all know, the markets have come down almost 15 to 20% over the near term since the start of the year. We have a lot of things that are kind of headwinds. For example, China-U.S. relations have been a headwind. We have Ukraine and the Russia being a headwind. We also have inflationary pressures being a headwind. And we also have the Fed raising interest rates as a headwind as well. So let's kind of start with the Ukraine and Russia situation. So with Ukraine and Russia right now, what we're dealing with is something that's been around since the USSR. Since the USSR was basically demolished a long time ago, what happens now is that there's a disputed region in the Donbas region in the Ukraine, which is going to consist of Donetsk and Luhansk. Those regions are basically being infiltrated right now by Russia, which is causing some volatility not only in our own markets but markets across the globe, because Russia has the power to basically turn energy on and off for those regions. So what happens now is Putin has the upper hand in regards to saying if the West does anything that he doesn't like, or they come in and cause issues with what he's trying to do, he can basically turn off energy to these countries, and now that leaves them in the cold. Unfortunately, right now, a lot of those regions get energy strictly from Russia, and that is a huge talking point in regards to the overall situation at this present time. Now, in regards to overall markets, you can see volatility that has actually been very, very high, is moving much, much higher based on the back of this. We've had markets sell off over 15-20%. The Dow Jones, the S&P, the NASDAQ have all sold off. So now we're trying to figure out how to position ourselves moving forward in regards to this overall economic geopolitical situation. So what we're doing here, as you know, at 9 Innings Capital Group, we do believe in remaining diversified across all different asset classes, having international exposure, having some emerging market exposure, and having U.S. Large cap and U.S. exposure as well. Domestically, our markets have done very, very well over the past 10 years. You saw another 28-29% increase in the S&P 500 as of last year in 2021. Off the back of the global pandemic. And now we're coming out of the global pandemic, and now we have a nice reopening phase that's coming to us as well. A lot of pent-up demand in regards to travel, a lot of pent-up demand in regards to the rate of people wanting to spend dollars. But the issue now is this. With the Ukraine and Russia situation, what happens to an inflationary pressures? Well, inflation could become another headwind for us in regards to the inflationary pressures that could come to us in regards to higher energy prices. What happens with higher energy prices? Higher energy prices basically get pushed off onto the consumer, whether it be their energy bills, whether it be just them buying goods and services, because we know how those goods and services get to the end consumer, which is through transportation. So with transportation costs going up, that means those prices will basically get pushed onto the consumer and cause another inflationary environment. But the good thing about all of this is that we know over the long term, markets tend to buck these trends and traditionally go higher. So I want to show you guys a little bit of something that I think is very important. So what we see here is that there's been a bunch of different things that have come across our timeline here. And I'll even go before 1994. Back in 1979, we had the oil embargo that was a significant issue, which pushed oil prices very, very high. Also in the 1980s to 1988, we also had the Iran and Iraq issue, which again was another inflationary environment in regards to overall pricing in regards to that commodity. So one thing we do know is this. Even when those things have happened, markets typically buck the trend and continue to move higher, as you can see here on the S&P 500 index. Now, we can go all the way back to 1998. So you can see here we had the LTCM, or the long-term capital management bailout. If you guys are not familiar with that, it was one of the biggest capital management companies out there that needed to get bailed out at the time. And of course, we had the Asian financial crisis. Now, there was a 19.3% decline in the overall markets at that time. But as you do know, is that off the back of that, markets did go higher. In 2002, we had the tech bubble collapse, and that lasted about 3 years, 2000, 2001, 2002. But of course, the 49% drawdown in asset prices, what happened? Markets tend to go higher. And of course, in 2009, we had the financial crisis, 56% drawdown in asset values there. And again, what happened? Well, we do know that the government came in and bailed out put a lot of bailout money into the system and allowed the system to get back to some normalcy, and then markets tended to move higher. So we can continue to go with the European sovereign debt crisis, Eurozone double dip, all the way up to the COVID-19 pandemic. We've had many of these major pullbacks in our markets, but what's important to understand is that with every major pullback came a rapid increase in regards to asset values. So I want to put that out there and let people know that even though we've seen these sudden reductions in asset values, we do know that over time, markets tend to move higher. So our philosophy here, remain diversified across multiple asset classes. We do know that these times, albeit tough to feel in regards to overall markets, it's important to understand we're remaining invested, remaining diversified, remaining diligent in our investment thesis. We've had a great run over the last 10 years. So many of us who have had money in the markets over the last 10 years have seen their accounts not only double, but sometimes triple in value based off the fact that markets have done very, very well. So we should not throw the baby out with the bathwater and start selling all of our assets. Like, for example, in 2020, during the pandemic, when the market was down 34%, some people did sell in March. But ultimately, those people who sold in March did not catch the upswing in overall asset value. So it's imperative to remain invested. It's imperative to understand what's really going on. Yes, we have inflation right now in our overall economy. We had inflation back in the 80s. Yes, we have interest rates increases coming on right now. We do presume that the Fed is going to raise the interest rate 25 basis points in March. So that's going to be a nice little piece in regards to slowing our economy down. Even though that the 25 basis points is not going to be 50 or 75, 25 basis points, it shows that our economy is strong enough to handle interest rate increases at this present time. So we're in a good situation here in the United States. We just have to remain cognizant of geopolitical issues like Russia and China at this present time. And that's what our job here to do, is to make sure that we're staying focused on why we are invested, how we're invested, and where we're investing in regards to our overall assets. Thank you guys for joining us. Thank you guys for listening to the 9 Innings, a monthly market recap. I appreciate your time. Stay humble, stay safe. Prayers go out to Ukrainian people, and I'll see you soon.